Last week I said that if Bitcoin lost the 73,700 support level, we could see a move all the way down toward the low 60,000 region. That is exactly what happened. Bitcoin broke support, accelerated lower, and printed a low just above $59,000. Now the big question is, was that the capitulation low? Or is it simply a temporary relief bounce before another leg down? Before we get into the details, here's my current read. On a short term, I think Bitcoin is due for a relief bounce. The market is deeply oversold. Sentiment is extremely negative, and on the weekly time frame we can clearly see a bullish divergence developing. However, I am not ready to call it a bull trend yet. The higher time frame trend remains bearish until we start reclaiming major resistance levels. So my current bias is short-term bullish relief, on a medium term cautious but still bearish, and on a long term potentially bullish if this weekly divergence continues developing. The most likely outcome right now is a relief rally first, followed by a test whether buyers can actually sustain momentum. Bitcoin opened the week around 73,700. Almost immediately sellers took control. Support failed, panic selling accelerated, and Bitcoin dropped all the way into the 59,000 area before finally finding buyers. The result was one of the most aggressive sell-offs we've seen in months. The interesting part is actually what happened after the drop. For the first time in weeks, buyers actually stepped in aggressively at support level. That creates the possibility that we're starting to build a bottoming process. Now let's look at what the indicators are telling us. Price remains below both the 50 EMA and the 200 EMA. That means the higher time frame structure is still technically bearish. Bulls have work to do. However, the RSI is where things start getting interesting. The daily RSI is deeply oversold, 26.2. And if we look at the weekly time frame, we clearly see there is a bullish divergence happening, where price made a lower low, but RSI failed to make a lower low. In simple terms, sellers pushed price lower, but momentum didn't follow. That's often one of the earliest signs that bearish momentum is fading. Now, a bullish divergence is not a buy signal by itself, but it's something that deserves attention because it often appears near major market bottoms. Now, the first level I'm watching is support around $60,000 to $62,000. That's where buyers stepped in during the recent sell-off. As long as Bitcoin holds above this area, the relief bounce thesis remains alive. Above us, the major resistance remains around $77,000. That's where sellers previously took control. For Bitcoin to regain strength, we need to reclaim that level. Now let's bring up the liquidation heat map. This is where things get interesting. Above current price, there's a large concentration of short liquidation sitting around $77,600 and $74,700. Markets are naturally attracted to liquidity. That means a squeeze higher remains a realistic possibility. Below current price, we still have liquidity sitting around $58,700 underneath the recent lows. If support breaks, the liquidity becomes vulnerable. So right now, Bitcoin is effectively trapped between two major liquidity pools, and whichever side gets taken first will likely determine the next major move. Before we continue, I want to quickly show you a promotion currently available through the exchange I use. If you're a new user, register using the link in the description below and secure your account by linking both your phone number and email. Deposit at least 100 USDT and complete 1000 USDT in trading volume. You'll unlock rewards worth up to 850 USDT and gain access to up to 100 leverage on futures trading. For larger traders, if you deposit 10,000 USDT and maintain that balance for 3 consecutive days, you can unlock rewards worth up to 4,000 USDT together with access to 20 leverage. And for high volume traders, once your cumulative trading volume reaches 200 million USDT, you can claim up to 10,500 USDT in future bonuses. Now, what exactly is a futures bonus? Think of it as an additional margin that can be used inside your futures account. It allows you to open larger positions while committing less of your own capital, improving capital efficiency and giving you more flexibility when managing trades. Of course, leverage increases both profits and losses, so always manage risk properly. Let's quickly look at the macro events that could impact Bitcoin this week. The biggest event is Wednesday's CPI report. CPI measures inflation, and right now inflation remains the biggest concern for markets. If inflation comes in hotter than expected, traders may push back expectations for future rate cuts, which is typically negative for Bitcoin and other risk assets. On Thursday, we get PPI and jobless claims. PPI measures inflation at the producer level, while jobless claims give us a snapshot of the labor market. If inflation remains elevated and employment remains strong, this supports the higher for longer interest rate narrative. And that's not what risk assets want to hear. The week's most important event is CPI on Wednesday. If CPI comes in lower than expected, Bitcoin could see a relief rally as traders begin pricing in a more dovish Federal Reserve. If CPI comes in hot, Bitcoin could easily retest support and potentially break lower. On the institutional side, ETF flows remain one of the biggest things I'm watching. The recent sell-off was accompanied by persistent ETF outflows, which means institutional demand weakened during the correction. What I want to see now is whether those outflows begin slowing or reversing. If institutional money starts returning while Bitcoin holds support, that strengthens the bullish divergence thesis significantly. Another study worth watching is strategy. Michael Saylor has once again hinted at additional Bitcoin purchases after posting what many traders interpreted as another accumulation signal. Now, one tweet doesn't move the market by itself, but strategy remains one of the largest corporate Bitcoin holders in the world. So continued accumulation remains a positive long-term signal. Finally, sentiment remains extremely important. Fear level at 15 significantly increased after Bitcoin's drop to $60,000. Historically, some of the best long-term opportunities appear when fear is high and retail traders are convinced the market is going lower. That doesn't mean that the bottom is in, but it does mean that we are approaching the area where smart money starts paying close attention. So here's the summary. Last week's bearish prediction played out perfectly. Bitcoin broke support and dropped from roughly 73,700 all the way in the 60,000 area. Now we're seeing something different. Weekly RSI is showing bullish divergence. Market is deeply oversold and a relief rally is becoming increasingly likely. However, the trend is still clearly bearish until proven otherwise. For me, the key level remains the $60,000 support zone. Hold above it and the bullish divergence remains valid. Lose it and downside risk opens again. That's the level I'll be watching this week. If you found this breakdown useful, please put a like, leave a comment and subscribe. I'll see you in the next one.